Hello, hello, hello. Crypto Keith is here at your service. And we're going to do a little bit of research on how to predict price patterns and trends on the charts. And yesterday we did a review of sentiment coin. And the sentiment coin is based off the sentiment wave. So the sentiment wave is the wave of emotions that people trade off of 90% of the time. People that aren't educated in how patterns work and whether or not the price is going to go up or down. So people that purely trade off emotions, mostly beginner traders. And when you do this, you'll end up buying high and selling low, and selling low. And 90% of people that trade do this and lose all their money this way. And so we are learning and sharing that journey with you how to not trade off emotion and trade off of logic and know exactly what's going to happen so we're not guessing and gambling. So the sentiment wave will be kind of the prices here and then it goes up. FOMO time. Everyone's seeing it on the top gains on CoinMarketCap and buying into it. So they buy at about here. They're feeling great now. But then at this high, it's extremely positive sentiment, but it's the highest risk to buy in there. And this is when you believe in the coin the most. So this is when you buy, you would most likely buy in, because down here when it's doing nothing, nobody wants to buy. But once they see it actually doing something, they buy. Then it might go down because the people that bought down here are selling, realizing, okay, it's at its peak. So usually the educated traders are doing the opposite of what the non-educated emotional traders are doing. So then say it starts going down because the experts are selling. Then that's the moment of denial where you're like, okay, I still believe in this token. I'm not going to sell. It's just a correction, not a problem. Then it drops even further and you start to panic. Then it's doom time. And then the depression sets in. Sentiment is extremely negative and the best time to buy. Soon, time to FOMO again once it starts rising and these people, the experts, start buying because it's at its low. This is a little bit more detailed. Sorry if you hear something in the background, it's my dog. He's trying to play with me. So here's a more detailed explanation of the sentiment curve. Optimism, excitement, thrill. Wow, I am smart. Euphoria, anxiety, temporary setback, I'm a long-term investor, denial, fear, desperation, panic, capitulation, despondency, depression, hope, relief, and optimism. So when it starts going down to here, how could I have been so wrong? So we're going to look into doing some research on how to predict charts. And Bitcoin is about to reach 10,000 US dollars. Like I said, it hit 10,000 Canadian dollars a couple weeks ago, and the US dollar follows right behind a few weeks later. We also see that Bitcoin dominance is rising. So Bitcoin Cash is not defeating Bitcoin anytime soon. Bitcoin's doing very, very well. And if you look at Bitcoin, historically, we see that what it gained in years, so from July 13 to January 17, is that gains that it had then is a small fraction of what it did this year. So this year was an insane year, which many times the bubble could have popped but didn't. We have with Bitcoin people saying the bubble's going to pop, but we have always a bubble and then a pop, a bubble, a pop, a bubble, a pop. And when you do this, when there's a pop, it means that you've dealt with it and now you can go back up higher. So if you were looking at it around here, you would say, okay, we're due for a drop. We're due for a pop of a bubble. And you kind of had a small one there, but a lot of people thought it might go down further here. And the people that predicted that it was going to go up are the people that look at candlesticks and look at data, not just the current gains, the 24-hour gains, not just the current price. No, they look at the bigger picture, and they also look at some information and data called candlesticks. And these are what candlesticks look like. So whether it's a green candlestick, a red candlestick, a small candlestick, a couple red candlesticks in a row, a couple green candlesticks in a row, wide, thin, these all are signs telling you whether it's ready to go down more or it's ready to go up more. So you really need to understand candlesticks. Bitcoin price tops 9,000, a historic first. So it's done very well. Bitcoin's market capitalization is now almost 151 billion. If we look over here, 156 billion. So the market cap is just insane. And Bitcoin Cash's market cap struggles to catch up or to keep up. But we have Bitcoin Cash gaining today as well. Bitcoin Gold has not been on most exchanges yet. So this, once other exchanges start accepting it, we could see it having gains with Bitcoin and Bitcoin Cash, just because it's another version in a lot of people's eyes of Bitcoin. So if they missed out on this one, they'll get into this one, and we'll see it kind of follow with Bitcoin up and down. That's what I'm predicting anyways, but we're just waiting for these other exchanges to accept it and release it to their users. We see that Treasure Wallet and some other wallets have given an access to splitting tokens and giving access to Bitcoin Gold. But some exchanges like Poloniex are still lacking and falling behind because they don't believe in it. It's a lot of politics going on with these Bitcoins and forks. So we see exchanges having political standpoints and views and trying to manipulate things based on their political views. So if an exchange doesn't like Bitcoin Gold, they will delay releasing it to try to damage Bitcoin Gold. So I already read all these articles, and I did a live stream and realized that I had a hotkey set up to stop the stream, and when I was typing in something, I hit that key and stopped it, and I didn't realize it. I am just starting to do more live streams, so bear with me, and we'll get better with time, and it will help me to release videos as soon as I'm doing them, because the way things work now, it takes me a whole day to edit and release a video. So it's sometimes 6 hours in between the time I record and the time I release the video. And it's not efficient that way. Live streams will be a lot more efficient, so we're going to take our time and learn how to do more live streams and do more with live streaming. So keep your eyes open for that and hit the bell so you can catch us as soon as we're live. This article definitely is relevant. So it talks about the problem with Bitcoin price charts, and mainly the opening and closing prices. Last week I wrote about the different methods used to calculate and express daily price changes in stocks and cryptocurrencies. The big takeaway, since cryptocurrencies trade in a 24/7 fashion, there is no closing price to quote. Instead, daily price changes are calculated by comparing the current price of the asset to the price of the same asset 24 hours earlier. So exactly 24 hours earlier, and calculating the percent change between the two numbers. Using this trailing 24-hour percent change calculation, however, can produce some very strange results, as I wrote last week. What's the practical effect of this rolling denominator? In the simplest terms, it means that if you're just looking at the percentage change over the last 24 hours, you can't tell whether you're seeing real-time price movement in the cryptocurrency or just residual price volatility from days before. Sorry, I just want to do one thing here. Nobody can see this live stream the way it's set up right now, because I was doing a test and had it on private. So I'm hoping that didn't just end the live stream and create a new one. I don't know. Oh well, we'll move on. We'll get this slowly with time. Today I want to show you two examples of just how widely distorting that rolling calculation can seem, using two hypothetical charts depicting Bitcoin prices over a 48-hour time frame. Chart 1. In our first example, we have a chart that shows the price of Bitcoin rising about 3% in day 1, as depicted by the yellow bar. On day 2, Bitcoin essentially goes sideways for 24 hours. So this is the 24-hour, well, every hour is marked here, right? And this is 24 hours the price of Bitcoin was going up. So over each hour, the price is going up. So the next day, if the price just stays the same, we'll see the percent dropping because it's relevant to exactly 24 hours before. So 11 p.m. Would go off of 11 p.m. yesterday's time and the difference between price. And so if 12 a.m. was a very low price, then 12 a.m. Will be high in relevance to that. So this price today will be high compared to yesterday, 24 hours ago. But as you go forward, the price staying the same over time, we'll see that because of this price was going up yesterday, the fact that it's staying the same today will make the percentage change drop. Because as we see here at 12 a.m. and 12 a.m. right here, the price difference is very high. But if you go to 11 p.m., it's low in relation to 11 p.m. yesterday. So it confuses things a lot. It's actually not an open and close price, so it's not very accurate at telling you whether the price is really up or down. It's just telling you whether it's up or down and relevant to the price exactly 24 hours ago. So now take a look at what happens to the 24-hour price change during day 2 as shown by the dark brown bar. When day 2 begins, the 24-hour change displays an increase of just over 3%. As the day progresses, however, the 24-hour change begins to roll off until this figure hits 0 at 11:59 p.m. Of course, at the 24-hour price change depicted by the brown bar during day 2 happened when there was very little change in the value of Bitcoin. The movement in 24-hour price change came entirely from legacy price volatility from the prior day. So again, the day before, the price is super volatile, and today the price is staying the same. It's not moving at all, but the percent change will be volatile because it's in relation of today's price in relation of yesterday's price. So you'll see that inverse of yesterday's. So yesterday it was going up, so in comparison to yesterday, we're down, going down, and vice versa. On day 1, the price of Bitcoin is very volatile. Between 3 a.m. and 5:30 a.m., the price of Bitcoin spikes up about 18% on a straight price basis, then bounces down a bit between 6 a.m. and 7 a.m., then finally crashes over 20% between 11 a.m. and 4 p.m. On day 2, Bitcoin trades basically sideways all day. As the price stays flat, however, the 24-hour price change bounces all over the map. First, the 24-hour price change crashes more than 15%, then it spikes up over 8%, crashes down around 15% again, and ultimately rolls off at 0 at day's end, showing absolutely no change over the course of 24-hour period. But meanwhile, there was massive changes over the past 24-hour period. 48-hour period. As soon as we get 24 hours of it staying the same, though, it will show us it's not changed at all over the past 24-hour period. Meanwhile, the percentage has changed a shitload over the past 24-hour period. For investors, especially retail investors new to the cryptocurrency space, it's easy to see how the 24-hour percent change convention could be confusing. If you're new to trading, you may want to check out your charts twice. And it's very, very important to understand this when you're trading, because most people just go off of that percent change, and it's how they catch a lot of people off guard. So we're a 7% increase to what it was 24 hours ago. Right here, today. So just because it's up 7% in the past 24 hours doesn't mean that it hasn't dropped, and doesn't mean that it's not lower today or not low So just because the price is in the greens does not mean that it's a high price, right? It could be a low, it could be on a downtrend, but then have that little rise, and people think, oh, it's an amazing time to buy or sell, but they could have bought a lot higher than that. So traders cannot just go off of that percentage. And now we're moving on past that, so getting that out of the way, the open and close prices. An introduction to Bitcoin trading and technical charts. Bitcoin trading is a popular market that has been growing in recent years. There are many who obtain Bitcoin to hold for long periods of time. However, many people trade their Bitcoin regularly with intra-range strategies, day trading, leverage trading, and more. Oftentimes, trading can sometimes be confusing, and there are many things to consider when participating within the exchange environment. The world of Bitcoin trading. The price of Bitcoin changes often, and some would consider the digital asset to be volatile. The fact is, though, that most currencies worldwide change in value quite a bit as well, and people make money trading fiat currencies and commodities based on these ups and downs in price. Bitcoin trading and cryptocurrency exchanges have matured quite a bit since the early days. There are multiple trading techniques and a vast array of exchanges that offer different trading services. Today we will discuss the various surroundings of the Bitcoin trading ecosystem, what to expect from these exchange markets. So here we have Poloniex. Candlestick chart. The candlestick chart is the most common chart used to technically analyze and predict Bitcoin's price movements. The chart is used in many other markets like forex trading and national fiat currencies. This style of charting is very popular, but can often be confusing to understand. Unlike bar charts, there are different aspects that look at the short and long-term outlooks differently. Candlesticks reference the price of each trading session's open, high, low, and closing positions. As the chart progresses, analysts can apply different trend lines and technical indicators to try and predict price movement, but in the trading world, nothing is for certain. Day trading and intra-range strategy. So this is a candlestick, the candlestick chart scheme. The low will be the wick coming out. The close will be the bottom of the candlestick. The open will be the top of the candlestick. The high will be that top wick. And then this is the upper shadow, the real body, and the lower shadow, they call it. Day trading and intra-range strategy. One style of Bitcoin trading that's quite popular worldwide is day trading. That is, trades speculated within the same day. This means a trader closes their position by the end of the day or within a specific time frame. Intra-range trading, or intraday, is relatively the same, and traders use shorter periods of time to profit off scalps of sudden fluctuations in Bitcoin's price value. Day trading strategies are driven by profit and can lead to a lucrative occupation or the significant loss of wealth. Trading this way takes research and practice to perfect the skills good enough to profit daily. And this is what we're doing. We're going to research with you and we're going to practice with you. And we do a lot of trading on our own and would like to maybe start sharing that trading with you once we share these basics with you and make sure we know what we're doing before we start, trying to share that with you. Shorting, long bets, options, and futures trading. This type of trading involves a trader placing a wager that the price of Bitcoin will be lower or higher within an arranged period of time. Just recently, a trader got some attention for betting on a 10 million Bitcoin short position and got liquidated because the price rose significantly. This means the trader placed a bet that the price would drop, but lost, leaving the trader to buy back the Bitcoin at market rate. Long positions are basically the opposite. So yeah, we see this happen a lot, with people like Jamie Dimon and these huge millionaires and rich people. And it probably happened. It probably was Jamie Dimon or something after he mentioned that Bitcoin was a fraud. And all these news outlets, they're constantly bashing Bitcoin, and they do it in a way that you might not realize. So I noticed that when they talk about Bitcoin, they always throw it in there when the price is dropping, and they don't usually talk about it when the price is rising, giving the illusion that Bitcoin's price is dropping, right? And also, there's something called sacral magic or word magic, or basically the law of attraction, where people understand that if they can get a bunch of people to think and believe something, that they can actually manifest it and create it as a reality. So we see all of the news outlets are owned by a handful of people, and these handful of people are not necessarily invested in Bitcoin. They're invested in a lot of other things that Bitcoin destroys, and their investments are not doing well when Bitcoin does well. So we see that they all are run by the same couple of companies, and these couple of companies can really affect the way things are shaped in the world. And they're really trying to destroy Bitcoin and have the price drop. So they keep mentioning that Bitcoin's going to crash, the bubble's going to pop, and they believe if they keep doing this, that they can have it happen. And honestly, I believe that this is how things work too. And there's some people that really understand how this works, and they've been doing it for a long time, especially with media. Media is a huge outlet for this. And so I am starting to worry that they're going to succeed just because of the pure energy that they're putting out to the universe, that Bitcoin's going to fail. So you can't be 100. That's the one thing that makes me not 100% confident in Bitcoin rising. Just the pure scale of the attack on it. And when they usually try to do something, they succeed. Not always. And we see it with Bitcoin, the perfect example that they don't always succeed. And then Bitcoin also shows that when it's attacked is when it gets stronger. So we see that this $10 $10 million Bitcoin short position, they wouldn't have done that unless they tried to or had some inside knowledge as to why the price would be going down, and believed that the price would go down. So it's funny how they lost their money, and we're going to see that happen. I actually was speculating on this and assuming that there'd be a lot of people betting on Bitcoin to drop, and they are all losing their money. So it's pretty funny. They won't do it for very long after they're losing this kind of money. Then that might teach them to back it and actually get into it. To get their money back, they might have to bet on it rising next time. This means the trader placed a bet that the price would drop but lost everything. The trader left the trader to buy back the Bitcoin at a higher rate. Long positions are basically the opposite, and the trader wagers that the price will be higher over time. In essence, this type of trading is like buying a good and hoping the good's price will drop or rise. with the trader profiting from the difference. So this is margin trading, and it's very risky, and I don't suggest any beginner trader to get into it for at least a year. You want to be trading for at least a year before you start betting with 10 times what you have. There are various methods of trading Bitcoin, options, futures, and speculative bets. Quite a few exchanges offer these types of trades, but all of them require collateral just in case a customer loses. Furthermore, Bitcoin futures trading can be risky, and traders should hone their skills when entering into these types of bets. Exactly. So if you start thinking that you're going to make it big when you're just getting into trading, don't think that. Realize and understand that you make it big by learning, not by betting. If you're going to just bet blindly, you might as well be gambling. It's the same thing. So when you understand what we're sharing today, it's probably the most important thing to learn if you're going to day trade, margin trade, long-term trade. Not as much long-term trading, but if you're going to try to make profits today and be in a rush to make profits, then you have to understand these things. Bear and bull markets. Traders often refer to market conditions as bear or bull markets, and sometimes use the phrase bearish or bullish. A bear market is when Bitcoin's price value drops into a downward trend with increased selling in short positions. A bull market condition references increased buying, a price rise, and traders placing long bets. During a bullish market trend, the price rises steadily and entry points often decrease. Alongside this, during a bearish market trend, investors wait for extended panic selling and entry points. Bear and bull markets often give a brief description of Bitcoin's price value and whether the price trend is up or down. Some technical terms. Simple moving average, or SMA. The simple moving average is a calculation of the sum of the closing price divided by the total of time frames. Fibonacci retracement. The technical analysis of Fibonacci retracement traces the price stops of Bitcoin using horizontal lines to track both support and market resistance. Trend lines are created between ups and downs and divided by Fibonacci ratios. Stochastic oscillator. The technical indicator known as a stochastic oscillator means the closing price within the price's trending direction over a period of time. Furthermore, it can be used with the SMA to refine insight on market movements. Overbought. Oftentimes, people refer to Bitcoin's price as being overbought, which means demand or price rises are not justifiable by technical indicators in the market fundamentals. So it could be overbought right now, just purely when we look at the charts and market fundamentals have been working to get Bitcoin to where it is today, and then we see this huge, at least this point up here might be overbought, so it's a high that's ready to fall. That's ready to collapse. There's nothing supporting it. So, trading is not easy. A lot of people assume that trading is easy money, but there are significant risks associated with this type of exchange. First and foremost, many traders leave their Bitcoins on exchanges. This means they are leaving their funds in the hands of an exchange with the expectations the business is responsible and secure. However, traders have often learned the hard way, like in the recent Bitfinex hack and the infamous Mt. Gox disaster, remember, if you don't possess your private keys, you don't really own them. And I constantly tell people that I don't suggest Bitfinex. I've used it. I was involved in Bitfinex when it got hacked. I lost about a third to a half of my money in Bitfinex. Since they got hacked, they stole from their users. To replace what they lost, they took it out of their users' accounts. And some other reasons I tell people not to put their money on Bitfinex. I currently have some of my money still in there, and I've made way more than I've lost, even in that hack. And it's a good lesson that if you do lose some money with a silly mistake, it is worth the lesson sometimes, but sometimes you don't have to lose as much as you did lose. So it's smart not to be greedy, and it's smart to, test the waters with a little bit of money over a period of time and put little bits of money in over time, or just do active steps to secure your funds better, like using Exodus Exchange or Trezor Wallet or Nano Ledger or paper wallets, or even just having two-factor authentication so no one can get into your account is the first step, and good passwords. But Mt. Gox I wasn't around for. Interesting fact about Mt. Gox that most people don't know about, that Mt. Gox, what does that stand for? Well, what it stands for is Magic the Gathering Online Exchange. So originally this was an exchange for Magic the Gathering cards, and then it got turned into a Bitcoin exchange because some people in the early days that were into Magic the Gathering were nerds, and they were the original people to get into Bitcoin, these nerds. And if you're one of those nerds, good for you. Mt. Gox disaster. Remember, if you don't possess your private keys, you really don't own the Bitcoin. On the flip side, trading can be lucrative with a lot of practice, and it's a popular environment in the Bitcoin space. Additionally, lots of people trade altcoins in order to gain more Bitcoin with their profits. Always remember that trading can be risky and requires much practice, and even plotted charts, technical indicators, and predictions can often be wrong. So that is part 1 to understanding charts, and we're going to have a quick break, and then we'll do part 2. So it might be in a separate live stream here, just to get this one out there, and kind of split up the video so it's not so long. So the next, when we come back, we're going to go over this, understanding Bitcoin price charts, which goes a little bit more in depth, and trend spotting, how to identify trends in the Bitcoin price charts. So lots of valuable information coming up, guys. And yeah, enjoy. I'm selling some of my Bitcoin right now. Actually, I've been probably selling since it was what, 7,000? We thought 7,000 was high a couple weeks ago, and now we have this. So yeah, make sure you put your buy and sell orders very wide. So have your buy orders low and have your sell orders high, because it always does the unexpected Bitcoin.